All right, everybody. How we doing out there? Doc Severson with you here, Ready, Set, Trade. 10X Tribe coaching session. Welcome aboard. Glad we got everything working. Apologies for this morning. We did not have streaming this morning. So first time in a long time we couldn't get everything working. But it's working now. So welcome aboard, everybody. I would love to take your questions today. That is what today is all about. Today is for you, not for me. So I can sit here and talk about markets till I turn blue in the face, and it'd make me happy as well too. So, but I'd rather talk about the stuff that you want to talk about. So what questions you have about trading, about how to master the discipline of trading, how to get started, how to get to the next level, anything like that is fair game. All right, so what I'm going to do is I'm going to stick myself down here in the lower left-hand corner. We'll bring up the charts, and as I wait for your questions, I will take a look at the current market and see what we're doing here. So today, we are somewhat hammering off the bottom. After yesterday's big green candle, everybody's looking for continuation from that, but it's not quite that easy, is it? So again, welcome aboard if you're just joining us here. Doc Severson here with Ready, Set, Trade. Looking for your topics and questions. It can be anything at all. There is no such thing as a bad question. They're all appropriate. So let's have them, get them lined up. And we'll go for the next, 30, 40 minutes, depending on when you guys run out of things to talk about. All right, so what we're seeing here is just a big choppy mess, and we have started to move from this is very common here, to go from range expansion or quiet and trending, actually, to sideways and volatile. Very, very common to see that. So this is not surprising at all. It's not necessarily, does not have to signify the beginning of the end of the bull. Could be the end of the beginning. Could be anything, right? But this is not necessarily the end. Typically when we get to the end, we have just a complete and utter rip to the upside. And we know that things are, and that's where we get into the principle of maximum adversity, because markets are screaming to the upside. This is where people are most heavily on margin. This is where they're most heavily laid out on their positions. And it's also the area of greatest risk. Okay, so after yesterday's big upside green bar, the problem is that we have not yet created a higher high. So we don't have a full reversal in place yet. And you can see this here on the daily chart. We've just gone into this sort of larger swings up and down. And we may yet get another swing to the downside, maybe even a piercing of the former low. We don't know that yet. But what would make me feel a little better about this is if we actually came in and broke above this high on the hourly chart. So that's going to be somewhere around 39.15, 39.20 on the cash index on the S&P. Hey folks, welcome aboard. Doc Severson with you here. If you're just joining us, I am looking for your questions. Somebody's got to go first. Somebody's got to go first. And once we go first, the floodgates will open up. So get your question in now before you get swamped. All right, so we'll be together here for the next, 30, 40 minutes or so, depending on how many questions come in. But don't be shy. Let me know what's on your mind, what you want to talk about. So that's what I'm looking for, a reversal here. So we can also look for, let's take a look at GameStop for fun. I am not trading this. This does not represent a great opportunity to me. But that's GameStop. That's what we're looking at right now. So this is just a market manipulation by different groups. They're each taking a turn at the wheel of this one. So this is not something I think is a high probability trade for us. we're looking for something that makes sense, right? Looking for something that makes sense that's given an edge. Just to me, anything that smells of gambling is not something I want to be part of. When you get a setup that's got some edge to it, so how do you get edge? Well, a great example of that might be if I'm just going to go and do a dynamic scan here of what we call the whale setup. So I'm going to look for whale setup with no monthly, and let's take a look at and see what we can find here to trade. So I'm going to go out to a three-pane chart, And the thing that stands out to me right now, actually, the S&P 500 qualifies as a potential whale setup. A whale setup is something where, if you think about this, you have, hey, we got a bunch of questions coming in. Cool. A whale setup is where you've got, below the ocean, you've got these, massive fish hanging out down there. Well, they're mammals, technically, right? But occasionally you'll see them break the surface and then come back down again. So most of the time you don't see them. But when they break the surface, everybody's like points at, oh, look at that. Wow, did you see that whale? This is what we're looking for from this. And the S&P is actually in this type of arrangement right now, as is the Dow. Typically, this is where we get to see big moves, big breakout moves. Sometimes they'll go in the opposite direction, but most of the time when they go in the opposite direction, that's because we have a larger time frame in exhaustion. Okay, so let's see, questions. When you discuss the Laguerre indicator, you seem to contradict yourself when speaking about what the extremes of it signified. Oh, okay. So Pete, it depends on what time frame. So let's do this. Let's go out to a single price chart, and we're going to add the RSI Laguerre to that. Okay, is there any particular chart that you want to look at with that? We can start with the S&P. Now there's two elements to the chart. There's two elements to the chart, or to this study. So this is a combined study, yes? This is a combined study. So the yellow line that's in the middle represents what's called the choppiness index, or what we call fractal energy. And what I want you to think of when it comes to fractal energy is that up here, a high level like this, which is above, anything above 55 is generally considered to be fully charged, but a lot of times we'll see these really extreme levels, which is greater than 61.8. Greater than 61.8. And so what I'm going to do up here is I'm going to put F for full. F for full. And what I'm going to do down here below 38.2, this is below 38.2, is put E for empty. And what I want you to do is to think of this as a fuel gauge for the chart. Now it can be different, and this is where we can get into contradictory behavior or analysis, is different time frames can show up differently depending on what's, like, in other words, a weekly chart can show full energy, a daily chart can be in the exhaustion. And I usually use a family analogy, like a family of four going on a summer trip. Not everybody is going to be in the same mood or going to be in the same, condition of exhaustion or ready to go, things like that. So the yellow line, again, is I want you to consider this full of energy, and down here is exhausted. So there's no, I don't believe I've ever been contradictory about that. Markets are either in range contraction. Range contraction is where they build up energy, kind of like winding a spring. So this is where you're going to see range contraction like this. When we have the markets going sideways like that, it's building up energy, and this is where we get into conditions where it's fully charged up and likely to break out, reverting back to the mean trend. Now, when we see exhaustion down here, like this is what we see at this point, which is right up here, this is where we've had a very linear move, and this market's out of gas. This market's out of gas and likely to go from range expansion to range contraction. Okay, so that's one half of the study is the fractal energy. Range contraction builds up. Think of range contraction where it stays within a range like this, bang, 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 bang. Like, think of this as winding up a spring like this, just winding it up tighter and tighter and tighter. Imagine if you were holding that spring in your hand, right? You had to hold it contracted in your hand as you wound up. Your hand would get so tight after a while, not very long, it literally shaking like this, you wouldn't be able to hold it any longer. And eventually it's like, the thing runs out of your hand like that. Think of that analogy that when you wind something up like that, it's likely to explode from that range. So range contraction is, yes, adding potential energy, packing potential energy into something, almost like riding a bike up a hill is adding potential energy to something. And then when you coast down the other hill or the other side of the hill, that's where you're releasing that potential into kinetic energy. So think of potential and kinetic energy, and then it'll all make sense. Just like back in high school, right? Okay, so that's one half of the study. The other half of the study is the light blue line. That is the RSI, or Relative Strength Index, in Laguerre time. It is not a linear time series, like most time series are 13 or 14 or could be 9 or whatever they are, right? Most of your studies in technical analysis are based on a linear time series. Oh, it's a look back of 14 candles. Well, it's not the case in this study. This is using the Laguerre time transform, which is adaptive to what's price is doing. And any of you would probably be able to find out more than I can tell you right now about the Laguerre time transform. I tried to Google it, tried to understand what it was. It started to remind me of going through calculus and differential equations back in college. I tuned out and I said, okay, it's an adaptive time transform. That's all I need to know. What it means to you as a trader is that it's very adaptive to price movement. Notice how we're getting almost a hook to the upside, and that's a valid signal. That's a long signal here in this point, but that's only after a couple of candles, which is much quicker than just about any other oscillator out there. So think of this blue line as a simple directional oscillator. That's all it's there to do. So a lot of people get hung up on because they want to think of everything as overbought or oversold. Now, the oscillator is certainly showing positive momentum and negative momentum, things like that. It's going to swing back and forth. It's a bounded oscillator. It's going to be between 0 and 100, or in this case, 0 to 1. But the yellow line is not related to oversold or overbought or anything like that. So don't frame it in that context. Understand range contraction, building up energy, range expansion, releasing energy. Potential energy, kinetic energy, physics 101. Okay, does that make sense, Pete? Let me know if we're good. Okay, second question coming in from Sinbad. Hi, Doc. Goldman Sachs Group has restarted its cryptocurrency trading desk. How will it affect Bitcoin price? Well, I've heard a couple of different takes on that. First of all, I've seen people that have gone back to 2017 and made the correlation to say, oh, here, this is when, they'll take a Bitcoin chart or something and they'll go back to, I wonder if we can do GBTC here. So we can do like a monthly chart. I don't know if this one goes back that far. All right, you're welcome, Pete. I think it's by far the choppiness index or fractal energy is my favorite study to understand what's going on. But I really do like the RSI component of it for short term, like intraday type signals, I think is really good. Okay, so I don't think we're going to get that much. We don't have that many months worth of GBTC, but I could bring up another chart here to show Bitcoin. Let's do that. We'll go out to the monthly chart, and we're going to see a lot of stuff here. So let's go to the log chart because that certainly makes more sense. So what I saw was somebody that came up with a, hey, this is when Goldman Sachs, or this is when some major banks started trading cryptocurrencies. And here they are again, they're trading cryptocurrencies. And so the implication was, oh, we're going to see another one of these things. And I don't necessarily think so. I think back then it was pretty easy to say, hey, this thing is way extended. We don't see a market for it. 3.5 years ago, we don't see a reason for this. We just see a lot of retail FOMO. And it was very easy for an institution to be able to jump in, take the other side of the trade, and fade the thing down into dust. And that's what happened. I don't think we're in the same situation as right now. We're seeing a lot more institutional and commercial support of Bitcoin. Now, volume tells the story on everything. Volume tells the story on everything. And also price action tells the story on everything. If we go back to, let's see, we're going to go off of the log chart. If we go back to our, let's just go to a price chart here. If we go back to our 2017 top, notice how we went into this completely nutso and we got very, very volatile. We got very volatile. No, that's not actually the high. Let's find the actual high. Here we go. Notice this. We went from 20,000 down to 11,000 literally within, 5 days or something like that. That was a massive change in character. I mean, we halved the value of the coin in about 5 days of trading. So range expansion, quiet and trending market character yielded to sideways and volatile, which eventually yielded to volatile and trending. All right, so there was a massive change in character that occurred right around this point. We haven't seen that yet. So we're not at the point yet where people need to okay, bail on the next lower high. Yeah, we're going through the same kind of thing that we went through a month ago. So that's just my read on this. I have never shied away from saying that I think institutional support's a good thing with any market that we trade because it equates to volume. Also, the Congress and the media tend to make HFT or high frequency trading into the boogeyman. Oh, they're getting in front of your bids and offers, so therefore they're getting better prices. Well, no kidding, right? That's the whole idea. They're adding more liquidity. HFT or high frequency trading is not a bad thing. It's increasing volume and liquidity. It's making it easier for you to get buys and sells. If we do the same thing, if we see the same thing happen with cryptocurrencies, and my sense is that's where I think institutions are going to find the ripest opportunities, is not necessarily just pounding the crap out of the spot to the downside. It's going to be doing intra-market arbitrage. That's going to be a huge advantage for them because they've got the horsepower to do it and the capital to do it, as well as derivatives. They're going to look at the derivatives game and say, my God, look at the implied volatility on here. Let's sell some premium. So I'm hoping that the options market also benefits from institutional involvement. Hey, Edge, welcome aboard. We are taking questions here. We're taking questions here at ReadySetTrade. Go ahead and fire them in. Nothing is off bounds here. So typically we don't talk about crypto that much in here, but it's something that I can certainly talk about here today. So that's GBTC. We have other markets. Let's see. Today we are just a little bit weak. Let's look at the opening range and see how that played out today. This is why during price periods like this, I think it's a poor idea to be trading the zero DTE strategy. So this is our bread and butter most of the time. Any ideas on euro dollars? Not my expertise. Foreign exchange is not my expertise, but we can take a look at that. We can, let's see. Let me finish my thought here, and I'll move over and look at the euro, see if I can find that. Okay, so right now we are just very noisy, what we see typically when markets are in quiet and trending is we'll see a big gap up, and then we'll just see it do nothing for the first 2-3 hours. And we're taking advantage of that. Right now we can't do that because market's all over the place. It's outrunning the expected move. Hey, Mark, welcome aboard. So one of my friends is on board here. Mark, I haven't seen him for a dog's age, right? Oh, yo dojo, too much advantage. I'm cracking myself up. Yeah, Mark, we got to get on the phone and talk loud cars and guitars sometime again. Okay, let's see. Let's see if we can find anything on the euro. Let's get away from the monthly chart. All right, I'm going to start by typing in EUR, and I'm just going to look at euro US dollar spot. Let's just do a full analysis on this one. So let's actually go out to the triple fractal chart. And we'll give it the full treatment here. Okay, so let's start from the top down here. The euro versus the US dollar has been in a long-term downtrend really since 2009. Okay. But has shown relative strength over the last few months. Probably because they've been pounding the crap out of the dollar to the downside, which is a valid policy, right? It's something that's happened, but the euro's been slightly stronger through all of that. So what do we have for trend? Well, we don't really have much in the way of trend right now on the monthly chart. So the monthly chart is showing a higher low and a lower high. So what that means is right now we're range bound on the monthly chart. What do we have on this is where we get into the difference between the different time frames, where the different time frames will argue with each other. They'll have a different source of opinion on that. So if we look at the weekly chart, descending patterns break to the upside. We now have higher lows and higher highs on the weekly chart. And something that's very important here is that there has been enough consolidation over the last X number of bars here. In this case, this is a 14 pattern. Hey, welcome aboard. If you're just joining us here, Doc Severson here at ReadySetTrade. Taking your questions. If you have any questions, anything you want to talk about, fire it in there and we'll get it queued up. So we have a lot of energy here on the weekly chart. Now the trend is to the upside. If this is our anchor trend, we still have an anchor trend to the upside. We have a monthly swing to the upside. The momentum is to the upside right now in the euro versus the US dollar. Now what's happening down here at the daily chart, which in this case might be our signal chart. Well, guess what? We still have a lot of energy. We have a consolidation pattern. Here we have a trend to the upside. We can see the golden cross here with the 50 and the 200. Not something I use to time any trades, but it's nice to have as a relative reference. We also have a swing trade down here, a swing test at 1.2. There's a swing test providing support at 1.2. We have a fair amount of energy at this point. It looks long right now. This looks like a long setup, and the long would be confirmed above 1.22. 1.22 euros versus the US dollar. Not euros. Euros. We used to eat those in college. Late night. Munchy food. We had this old Greek dude, of course, and we used to mess with the guy. We'd go in there and say, "I'd like a gyro, please." No, euro. We get a little language instruction. Okay, who's got the next question? Let's see what's going on. So that's Sinbad. That's my idea on the euro versus the US dollar. That's my thought on this. So to me, that would be a long setup at this point. Now, you could go down even further in time frame if you wanted to. We can go to a single chart here and go down to something like an hourly chart. Let's just do an hourly chart on the euro. So every price chart is just a price chart to me. I don't personalize this at all. So what we're seeing here on the hourly chart is just a lot of noise. It's trading within a very large range right now. That's the question of the decade, is about the dollar's reserve currency status. People have been talking about that topic for the last 10 years, and who knows the answer to that? I don't know. I focus on things that I can control, which is to analyze price charts in front of me. But no doubt you will find plenty of opinions that are out there. There's an expression that I heard the other day, which I think is appropriate for those that are in this business. Strong opinions, loosely held. So you'll see somebody have a very strong opinion, but then you'll see them change it the day after that. It's like asking economists. Any thoughts on NEO? Is there a bottom in sight? I haven't looked at NEO for a while now. I did not want to get in on this one because it's gotten a little too frothy lately. So we chased after a lot of other SPACs, but let's see. Okay, so let's look at this from larger time frame on down. So what do we have here? We have weekly chart showing higher highs and higher lows, right? Higher highs, higher lows. And we potentially have a lower high, lower low. We may have a reversal here on the weekly chart. It's a little tight. I would say that's too tight for a reversal on the weekly chart, but there's no doubt that that's a daily reversal because we have a lower high, lower low combination. Lower low below 54 means a reversal on the daily chart. Where's the end to this? So we just had earnings on this one. The way that you posed your question makes me feel like you're an investor in this. Typically, people will wear their opinions on their sleeves. And the thing that I've noticed too is the more that you're scared about a position, the more that you're going to narrow your focus in on it. And that's certainly something that I did. And what you find is that what you focus on expands, right? If you're a little nervous about a position, you will focus on that to the exclusion of everything else in the market. Because every waking moment, you're going to look at that thing, you're going to look at your phone, and you're going to see like what's going on with the price on this thing. I've been there before. It's like a mania. You can't look, you're looking at it every 10 seconds to see if it's going in your in the right direction. So where's this thing going to bottom out? Well, I don't know the answer to that, and nor does anyone else, but what you can do is build the framework to understand what would have to happen for that to occur. So the way I do that is to go down in time frame to understand what's happening to the price. Right now we have, a series of lower highs and lower lows, so we're still working ourselves down into a downtrend. Luckily, it's got past earnings, so probably the implied volatility has dropped a little bit since then. But what would you need to see for the price to reverse? That's what you should be asking yourself right now. First of all, we have support, which is down here at about 41 or so. You want to see that hold. For this to start reversing, a number of things would have to occur, right? So one of the simplest things that you can keep track of, and I did not draw this very well. Let's try this one more time. One of the simplest things that you can track is a simple trend line, like so. As long as the price is finding that to be resistance at the trend line, it will continue going lower. As long as it's making lower highs and lower lows, it's continuing lower on there. And so what you have to do is you have to map out what you would have to see for this to become an uptrend. Right? So you'd have to see something like this occur. You'd have to see a break to a new high and or higher low, combination of those that creates the reversal. That also brings up something else that I call rule number 1 of risk management. Before you enter your next position, and this goes for everybody out there, before you enter your next position, have your exit already defined. Don't enter another position until you've defined your exit ahead of time. It makes the job much, much easier. Trying to figure out an exit in a live market with a position that's pushing against you every day, every minute, every second is extremely difficult, and I would say almost to the point of being impossible, because for you to trade effectively, you've got to ignore that lizard brain that we all have. And you can't do that if you're under pressure, if you're feeling fear about a position. So trading below your risk radar in terms of size, that helps a lot. But also understanding exactly precisely where your exit is going to help a lot. All right, Ed Sledge here. Doc, given the way the market has been behaving in recent months, how would you construct a strategy to get your $100 a day, let's say options? Would you change anything? All right, great question. This is something that we have to do all the time. So to answer that question, let's pull back a second here. I'm going to go over to the S&P. And go to the daily chart. So for you guys to understand this, you need to understand what the difference is in character. So when we're wondering, oh, looked like we bounced for a second there. We lost the feed. Okay, I think we're back. I think we are back. This is a completely different market and requires different trading opportunities for you to look at different trading opportunities. So what we were looking at was selling premium way below the market down here and looking for swing trade opportunities. Okay, good. Okay, now when we transitioned, and this happened in the month of April, when I transitioned and said, okay, now we are long. We're going long because the market just put in a higher low, higher high combination. And this is where we start taking swing trades. And we were selling puts. Okay, when the market topped out here and went into corrective for about a month or so, all of that stopped. Right, so we went away from the whole notion of zero DTE. We stopped doing those, and it was you pull back during those times. So these are more difficult. Corrective markets are much more difficult to find daily opportunities in. So you could do things like there's another strategy which I'm going to be bringing out here in a month or two, which is going to be called the short call diagonal. But overall, what's the direction of this? It's screaming higher, right? So generally staying long is what we want to do. So during times like this is where we can use the pullback to create more passive income on the pullback. So there's always a balance, and the way that I look at this balance is to understand, and I'm sure that you know this from going through the course, but what we have to do is during corrective periods, we have to go after more of the passive income, or maybe even some of the non-directional trades, like the long condors that I'm setting up lately, because I'm saying, look, I don't know where the price is going to go. We're going to have a big move. It could go in either way. So let's set up some trades that'll take advantage of that. It's matching the character of, to answer your question, to get to this point, it's matching the character of what the market's giving us right here, right now, to what we can make money with. So we have to know when to turn off the zero DTEs. We can even go directional if you want to do that. You can use the two-pane fractal to go directional, and this is where we have greater moves. We have more ATR, we have bigger moves intraday, bigger swings. It's not my favorite thing to do. I don't want to sit around and maintain and manage a position all day like that, but that's where the opportunity is, especially for things like day traders. But when markets are quiet, like periods like this, then we do the zero DTE, we're done in the first hour and on with your day. When markets are noisier, this is where we have to kind of dig in there, sell puts deeper out of the money. We're doing directional trades intraday, those kind of things. Okay, let me see what, so Henri's talking about NEO. Oh, you got short puts at 40. Yeah, those are close. Now, there's a good strong support level at 40. Now, what might be happening here, and this is just catching my eye, is that we may be setting up with a big old head and shoulders pattern like this. So you might get some relief. The market will see this bounce and so everybody goes, whoa, look at that. And then all of a sudden, boom, it comes out. So you'll get your cyclic price action. You'll get your bounce to be able to relieve yourself from that. But you have to, like everything else in this market, you have to be taking profits into strength if you can. Taking profits into strength when you can. Okay, let's see another question or comment here. I find myself trading crypto thinking because my thesis is that it's a market where outsized gains are possible, hoping to get the capital stack large enough and then trade your RST option plan. Yeah, well, you could actually trade, like I've been trading options in Ledger X with just a simple little $500 account. Now, if Bitcoin goes above 50,000, I'm going to need more than that, right? But these are, you know, we're making roughly 10 to 12% over the course of maybe 6 weeks, and it's growing pretty quickly. So it's possible to do, and it's certainly a much simpler trade. Sinbad, Doc, what are your views on trailer park companies like Sun Communities? Look, I am not... If it's not on a price chart, I don't know what to do. Sun Communities, can you give me a ticker? I am like the furthest thing from a fundamental investor. To me, everything boils down to a price chart. SUI, ELS. So it's funny because people on the crypto channel are like, hey, what do you think about this project? And I'm like, I don't think anything of it. Give me a ticker and I can look at it. Okay, this is a chart that's been going sideways like forever. The market's finding it very difficult to provide a value on this. On a price chart where it's just not moving, there's really no demand for something like this, ELS, and they're both the same. So remember, there are thousands of stocks that are out there. You know, there's thousands of cryptos there's thousands of assets to trade out there. Is this the very best one that you can pick? You know, so unless you're thinking fundamentally like this thing is going to blow up at some point someday, to be fair, if we look at Tesla was really just a piece of crap chart for the longest time. Let's go back to the monthly chart. Tesla was really awful for quite a long time. It just sat there for a long period. And this, for some reason, I'm thinking that I thought Tesla was sitting in a consolidation for like a year. And certainly Amazon did the same thing too. You know, so you can fundamentally be, yeah, Amazon was in this consolidation. Wait a minute. Oh, no, we need more than 3 years. That's the problem here. Let's go back more than 3 years. What are you kidding? There we go. So Amazon was, this is actually an ascending triangle, by the way. But Amazon was sitting there like forever down here at these prices. And let's look at Tesla now with a 10-year. Yeah, it was just sitting down there forever, you know, at about 50, 60, below 100. And this is, of course, pre-split pricing, right? So this just sat down there for a long time, but you can look for the breakout. Pete, with increased volatility, VIX greater than 20, would it be better to sell puts at 60 DTE rather than 45? To better manage drawdowns in the market, or should we stick to 45? I've done anywhere what I can. So people get religious because Tastyworks says, you know, thou shalt sell 45 DTE because the greatest time value decay occurs between 45 and 21 DTE. Okay, so that's their, and they've got the numbers to prove it. They've got the numbers to bear out. If you have the options to be able to sell at 45 days to expiration, then you should probably do so. If you do not have the options to do so, you might have to do something more than that, right? So if we're going out to, let's see if I can find one here. Now, CCIV's got monthlies and weeklies. Let's see. If we're doing, let's see, I want to find one of these. Yeah, like here's one, and this just happens to be 16 April is 45 days now. But this is a very typical situation where a lot of these SPACs have options that are fairly, you know, there's sometimes if you miss the entry window on some of these, so like if we get down to 35 days, that may be a little bit thin. Right, so this one's going to be sitting out here at 70. What do? Well, you take the 70-day setup. If it gives you, remember, what you've got to do when you're selling puts. When you're selling puts on something, let's get back to the daily chart. What's the most important thing about selling a put? Anybody? What is the most important thing about selling a put? You've got to be a willing buyer at that price. So if you can't get the price that you want to with a 35-day option, but you can get one with a 70-day option, and if it's a good signal for where you're getting in, then you got to take the 70-day. So it's a matter of what strike that you can get based on where you're a comfortable buyer. If you've got a weak hand, the market will find out about it. If you're not completely convinced that that is the right strike, to stand in front of the freight train and say, stop. I'll take that assignment right here. Thank you very much. Right? You've got to have that kind of arrogant attitude to say, go ahead and assign me. Because if you're scared in a position, the market will find out about it. But if it's a super granular cycle, like if you're trading something like, let's see, so NEO's got a whole bunch of weeklies that are out there, and you can see there's plenty of granularity. You can kind of fine tune in what you want to trade. But some of these don't. Some of these newer SPACs don't have a weekly option chain. They just have the big monthlies. Okay, how are we doing out there? We've gone for 45 minutes now. Any last call for questions here? I want to thank everybody for coming by here. Got time for another question if anybody wants to throw one out there. Let's see how the market is closing out the day so far. We're going to go to our active trader, see what's happening here. It's just been a big mess. You can see this has just been a big consolidation day. at this point. So again, back to the hourly chart we go. Hey, Marcos. Let's go back to the SPX on the hourly chart and see what our battle lines are. Okay, so Henri's got a question now. FSLY. Fastly. Okay. All right, what I'm going to do, I'm not particularly in love with the daily chart. It just seems to be a big sideways mess, which means that there's a larger time frame pattern in play. So what do we have is we have basically what you're trading is a monthly consolidation. You've got this monthly chart, which is just a little bit of a train wreck, to be honest. So this has gone from range contraction to range expansion and is now ready to go. We're ready to go. We're in exhaustion to the downside. It's certainly a pullback near the bottom of the range if you want to look at something like that. However, it's also a downtrend in the daily chart. So unless you think that their support's going to come in at this level, and we've already, doesn't seem to like the earnings, right? So this is a chart that only a mother could love, quite honestly. Yeah, sorry to be blunt. I mean, I'm trying to, you got to be blunt with this. You cannot fall in love with these assets. There's always a better chart. There's always a better chart. So you should strive to find the very best charts that you can that are in good, solid uptrends. Don't try to catch the falling knife. There's this thing that's gone out there, and this has been going on for as long as I've ever been involved with markets, but the media, Hollywood, and everybody propagates this sort of find a needle in the haystack mentality, right? I'm going to find that one stock that nobody knows about, and I'm going to have it all to myself. There's going to be nobody else that knows about this. I'm going to buy this thing at $1, and I'm going to take it up to $300 a share, and I'm going to retire based on that. And that's just fantasy, right? So there's plenty of stocks in a great uptrend where pullbacks in an uptrend make it a very easy trade. Very easy trade, right? So don't let that human cognitive bias color you. A lot of people call in or pose questions here with companies that they work at. And they say, hey, Doc, look at this company. And they don't tell me that it's a company that they work for, because what they're trying to see is what they want to see. And that's called confirmation bias. Okay, let's see. A couple of, let's see. Cube. All right. So, Henri, I hope I wasn't too brutal with that one, but I'm going to be honest. I'm not going to necessarily tell you what you want to hear. All right, Zekin. Okay, so it's been doing well over the last couple of months. And we've moved to at least an upswing on the monthly chart. We also have perhaps what might be an uptrend on the weekly chart. However, we're in a downtrend on the daily chart. So the question gets to be here is like, how low is this thing going to go? So we do have an exhaustion level on the weekly chart, which would give me some pause, as well as the monthly. So it's going to be tough to... So I would say this thing is probably going to do something like this for a few weeks before this thing is ready to go. All right, so last one for today is going to be Marcos. What is your best strategy to manage your stop loss? By levels or percent, do you put them automatically, or do you just set the alarm and close them? Okay, so there's there's a couple of ways that I can answer this. And I'm just going to clear, let's just go out to a daily chart. So this will be our last question for today. And I'll see if I can draw this out here. Okay, if I'm trading options, oh, I've got my mouse in the wrong place. This is all this crap that happened to me today. I got all the windows all messed up, and now I can't draw with my pen. Okay, so I'll just try to mouse this out then. Number one is if you're trading something with options, what you want to be able to do is set up the trade in limited risk so that there is no stop loss that you have to identify. So with options, I'm generally doing spreads or some form of complex spread where it's not, or I can even just do a call option and say, all right, I've invested as much as I want to lose in it. And we've done the same thing with spot in crypto. It's what we call the fixed risk position. You define the risk of the position based on the position size, and you just let it go, right? It's the old Viking funeral. Push that thing off on fire and let it burn into the swamp. And so by letting it go at the very beginning of it, when you set up the trade and said, okay, I put all the risk that I want to in this thing. If it just burns into the swamp, I don't care. It's a mental release where you don't have to sit there and hold your breath while you're holding a position like, I hope it doesn't go down from here, right? It's a whole different way of setting a position. Now, if I'm trading a futures contract, which is unlimited risk and unlimited reward, I can't just let it go. I cannot set up the trade and just let it go. If it's a futures contract, whether or not it's a futures or perpetual or some other device like that, this must be bracketed. Must be bracketed. You cannot trade one of these without having a bracket. So if I've got a long position entering here, I've bracketed this with a sell stop down here and a sell limit up here. If I have a futures contract which is short, so I'll just put FS here and I'm entering a futures contract short, I will have another bracket here, and this will be called a buy stop and a buy limit below the price. These are called one cancels other bracket orders. Must use them. So when it comes to options, I try to do very simple things. With cash secured puts, I'm entering the trade at a level that I want to be assigned at on a pullback, so it makes it very easy, makes it really not, I don't have to stress about like, oh no, the price is coming down. You know, if I fundamentally change whether or not I want to own it, then I can always look to roll it out or close out the position. And other option trades, again, try to keep it simple with the risk already baked into the position. When it comes to futures contracts, or even stock or spot crypto or something like that, I'm always trying to limit the risk of the position ahead of time. Okay. Hey, everybody, that is all we got for today. Thank you very much. I hope you got something out of this. We do this every week on Tuesdays at 3 p.m. You guys are welcome to show up at any time. We're also going to be doing one for the elite crew. We do what's called trade school on Thursday nights with the elite bunch. So we're always, 5 days a week. We're on in the morning, first hour of the morning, and then we get together on Thursday nights and we kind of go over some other stuff too. Can't get enough. So thanks, everybody. You guys take care, and I will see you mañana. You guys take care now. See ya.